over the past several years. We wish him all the best in the future. With that, let's open up for questions.
Thank you, Salil. We will now open the floor for questions. Joining Salil is Mr. Nilanjan Roy, Chief Financial Officer, Infosys. The first question is from Ritu Singh from CNBC TV 18.
Hi, Salil. Hi, Nilanjan. As always, we want to understand why, yet again now for the third time during the year, you've revised this guidance. What is the visibility you have now, for the remaining part of the year? Why the tightening? I mean, sure, it's going to be higher than 1%, perhaps lower than 2.5% on the upper end. Secondly, what are you seeing when it comes to client budgets now? Are clients in the US open to spending more? What are the areas of weaknesses and strength, whether it's geographies or sectors? Again, the same question, the headcount continues to come down. Even in this quarter, it has, even though your attrition rate is lower at 12.9%. Your hiring plans for the year, if you could outline. And apart from the numbers, if you could clarify on the deal wins and that mega $1.5 billion deal, that MOU that you had signed with a global client in the AI transformation space that you seem to have lost out on. What was the reason for that? Are you continuing to see deal cancellations? And while you wish your colleague all the very best, and you always say that Infosys has produced talent for other, companies, you're proud of that. But, what is the impact on business? Because this is not a one-off event. We've seen multiple exits over the course of the last 18 months or so.
Okay, so let me start off. There are several questions in there. The first, I think, was on margin. So what we've done is really, as we get closer to the end of the financial year, we've tightened the margin, the revenue growth guidance. The margin guidance remains the same. So in effect, really, the higher end has come a little bit low and the lower end has gone up a little bit. So we see the outlook in essence quite similar, but the guidance is tightened. That's how we're seeing it, based on what we've seen in the first 3 quarters, where our growth has been 1.8% in constant currency terms over the previous year's 3 quarters. And that's really all we've done with the guidance. On the budgets, I think that was one of the questions on what we're seeing with the budgets. At this stage, we have not seen any different behavior from clients. Typically, as you know well, Q3 is a quarter with large furloughs and other end-of-year holidays, and that we've seen continue. We've not seen either an increase or either a decrease. So the same sort of a view. Digital programs are fewer. Cost and efficiency, automation is much more. And generative AI has a lot of interest and traction, even if it's small revenue numbers today. Then there was a question, I think, about the MOU. We have no additional comment. We'd shared the comment in the statement we'd made, I think, some time ago in the quarter. In terms of leadership, we are indeed fortunate to have a good team and a very strong set of leaders within the company. And over the last several quarters, and even in the past, the people who have taken on many of the new positions are people who have been in the company, have developed their skills there. And we are delighted. Nilanjan spent 5 years in that role. He will obviously share his view. And we've had a fantastic outcome in those 5 years. And really, Nilanjan's contributed immensely to that. And all the best wishes as he looks ahead.
Thank you.
Sorry, on the headcount question as well, and for Nilanjan, your Project Maximus, just before you go, I'd like to, know from you, where do you see the end goal of that project? How do you evaluate your term here, and what's next for you, after March?
Yeah, so it's been a tremendous 5 years here. I think, what the company has transformed over the years has been truly remarkable, right? In terms of the client intimacy, what we see, hunger for large deals, the focus on people, the entire focus on the shareholder, the capital allocation. So truly, outside the numbers, which, you all ask about, has been this whole transformation happening inside, and, under Salil and the board's leadership, that's truly been wonderful. 5 years is a long time, 20 quarters, answering the question. So I think it's time to move, and I'll do something later on, and as the press release says. But more importantly for me, I may leave Infosys, but Infosys can't leave me. It just has a part of me inside.
Thanks, Ritu. The next question is from the Economic Times. Beena.
Hi, Salil. Thanks for the call. Firstly, in terms of your deal pipeline, could you give us a sense, how does the next 2 quarters look like? Because your deal pipeline, the order book has reduced, that we've seen. And in the previous quarter, it was 7.7 billion, but the TCV has sort of reduced. Could you give us a reason for that? And on the senior level management churn that we've seen, just adding to what Ritu said, what is the reason that you've not really, absorbed newer or recruited newer or made newer appointments? And what is the reason that you're seeing a lot of these churn that's happening? Do you see this as, a one-off event, and what are the reasons? And another thing is on the reports they're doing around about Infosys sending a communication to a rival about anti-poaching and unethical practices. Could you give us your view on that?
Okay, thanks. Let me try and go through the questions. I think first on the wins. In fact, this quarter has been, I think, very strong at 3.2 billion. If you look at the 9 months, it's the highest ever value of deal wins that we've had. Actually, it's more than what we had in the year before, where we had a very large deal in that instance. So we feel extremely good. 70% of this is net new, 71%. That again is extremely strong because it helps to position us for more into the future. The deal win from last quarter was also exceptional, but those are big numbers. I mean, 3 billion is really well above our average deal win in any quarter. If you look back, let's say 8, 10, 12 quarters and so on. So we feel extremely strong with that, what we see going ahead. And these have deals which are related to cost, efficiency, automation, consolidation, new work on SAP, cloud. So a lot of different areas, which is good. It's across the portfolio. I think you had a question on our senior leadership team. Again, my sense is, we have an exceptionally strong team at different levels within the company. We've continued over the last several years, and even well into the past, always promote a lot of people internally with larger responsibilities. We will do that this year and in the years ahead. And the type of work that we do, people have exposure to some incredible opportunities, both with clients, with delivery, with projects. And the type of projects we're working on are quite leading. So we feel good about that. In terms of some of the media reports you alluded to, we have no real comment on that.
Thank you, Beena. The next question is from Ayushman Barua from Business Standard.
Hi. So I think the trend seems to continue that despite the large and mega deals, revenue growth has not been on par, with the deals. So when can we expect the revenue growth and the large deals to be in sync? That is one. And secondly, any specific pockets of weakness you would like to highlight, both in terms of verticals or geographies?
So there, I'll start off, and Nilanjan may add some things. I think large deals, more represent what is the level of connect we have with our clients for large transformation programs or consolidations or cost and efficiency programs. The revenue reflects both what deals contribute and then what programs clients are doing or not doing. For example, digital programs have been reduced in what we've seen over the last few quarters with clients. That really combination gives us the outcome for the revenue, and we'll see how the global economic environment evolves, and that will tell us when that comes in. Sorry, what was the second one? Oh yeah, the segments. So there we are seeing, financial services, high tech, telco, where we still see impact in the market. We see growth in manufacturing, energy, utilities, life sciences. So we do see both of those things. In geography, similarly, we see impact in our North American business, but growth in the European business. So it's not sort of one thing for all.
Thank you. The next question is from Money Control, Rishabh Shaw.
Hi, gentlemen. Rishabh here. So, on your headcount, year on year, we have seen a lot of headcount. So, does that indicate a weaker than expected revenue trajectory from here onwards? Your number of clients has been down month on month and year on year. So, I would like to say something on that. And on furloughs, how much has that impacted revenues this quarter? And discretionary spending, when do you see it coming back?
Yeah, so I'll take a couple of them. So I think furlough is a seasonal industry impact, and it's reflected in the -1% constant currency decline. So it's part of that as well. In terms of headcount, we had already told you all last quarter that we have a lot of utilization headroom still. In a way that was led to the 6,000 odd headcount reduction. We are still at 83.7, and our comfort range is between 84, 85. So we still have some capacity, and we can always crank this up by taking more trainees, on short notice as well. So our model is very flexed in terms of ability to recruit fast, train them fast, and put them on production. So that in that sense, I think we are in a good space in terms of ability to capture any future growth.
Great. Thank you.
Thank you. The next question is from the Mint newspaper, Jas Bardia.
Hey, gents, just a couple questions. At the start of the year, you had expected to grow at 7%, and now this is the third such revision. How much of this revision do you attribute to company-specific factors, and how much of it do you attribute to macroeconomic issues? The second question, did the cybersecurity incident at McCamish lead to the termination of the 1.5 billion MOU? Could you give more details on this, and also could you cite some measures that Infosys is taking to address this?
So let me start off with the guidance point first. I think on the guidance, this quarter really we see this more as a tightening of the guidance. So in that sense, it's not so much a change. It's more that as we get closer to the end of the financial year, the visibility gives us to a similar outcome. So if you look at last quarter and this quarter, it looks in that sense similar, except the distance to the end of the year is reduced by half. On the deal specifically, the MOU, we have no additional comment, and we had made a specific disclosure at the earlier time. On the McCamish question that you asked, I just wanted to maybe share with you a comment from what we had stated in our financial results. As we've shared earlier, one of our subsidiaries, Infosys McCamish, experienced a cyber security incident that resulted in the disruption of some of its services. The systems have been largely restored and are now up and running.
Thank you. The next question is from NDTV Profit, Tushar Singh.
Hi. A couple of questions. First, on the deal making, we see that the large deal wins are still happening, but they're still not meaningfully converting revenue. So when do you think that is going to come back? And are the large deals ramping up as per expectations so far? Also, your margins have declined quarter on quarter, I think because of the wage hikes that went out. But you have maintained your operational profitability guidance for the full year. So what are the margin levers left in play so that's giving you the confidence to maintain those margins? Final question on your, I think the acquisition that you have done of InSemi-Tech. Can you just talk to us about it?
On the first one, I think the way we see large deals really helping us to build a foundation into the future. And the win sizes, the overall win value is very strong at 3.2 billion. At 71%, very good to have the net new. That gives us, let's say, one piece of the revenue into the future. And equally, there are digital programs or other programs which are not something that clients are looking at in this environment, and that takes away a little bit from the revenue. So that combined gives us the revenue outcome as we see it, and as we as the outlook as we see it. So that's how we will put that together. On the margin,
yeah. So on the margin, as you've seen in our disclosure, one is we of course given our wage hike from 1st of November. That's about 70 basis points of the drop. In fact, we've dropped 70. We've had another impact of 30 million between revenue and cost because of the McCamish incident as well. So that's actually a 1.3% headwind. We've compensated that at about 50 basis points of the Project Maximus, which now is in full flow. This is across, we've talked about 5 tracks and many verticals. And there's about 10 basis points, which is from currency. And then, of course, there's a balancing around furloughs, et cetera, et cetera. So we actually are seeing a very strong underlying margin movement coming because of Maximus. And, of course, the wage hikes, et cetera, were planned and known for and are leading to this margin gap for this quarter.